Before you do anything else today, before you check your portfolio one more time, before you make a decision you cannot take back, I need you to hear something. What you are watching right now is not a market crash. It is a heist. And if you sell today, you are handing them exactly what they want. It is Monday, February 2nd, 2026. And if you own precious metals, you just watched the most violent 48 hours in modern market history. Silver is down 36%, from triple digits just days ago to $83 this morning. Gold smashed 13%, trading around $47.50. The screens are red. Your account is bleeding. And every financial news outlet on the planet is running the same headline. The bubble has burst. Cash is king. The adults are back in charge. They are telling you that Kevin Warsh, the new Federal Reserve Chair, is going to save the dollar, drain the liquidity, end inflation, make paper money great again. And because of that, they say precious metals are dead. This is the narrative. This is what they need you to believe. But here is what they are not telling you. While the paper price of silver crashed 36% overnight, try walking into a coin shop today and buying an ounce for $83. Go ahead. Call your dealer right now. You will get one of two responses. Either we are sold out, or sure, we have inventory, but the price is not 83, it is 120. The paper market says silver is worthless. The physical market says silver does not exist at these prices. One of these markets is lying, and I'm about to show you which one. To understand what just happened, you need to understand the weapon they used. It is called a futures contract, and it is the most powerful tool in financial warfare. A futures contract is not actual silver. It is a bet on the price of silver, a promise to buy or sell metal at a specific price in the future. Here is the dirty secret. You do not need to own any silver to sell a silver futures contract. You just need margin, a small cash deposit. And if you are a big institution, a market maker with access to the exchange, you can create these contracts almost infinitely. So here is exactly what happened early Monday morning while most of America was asleep. Around 3 a.m. New York time, after Asian physical markets closed but before London fully opened, someone dumped thousands of silver futures contracts onto the market in milliseconds. Not physical bars, paper contracts. The algorithm sees this flood of sell orders and interprets it as panic. So the price drops from 120 to 110, then 100. And this is where the trap closes, because retail traders, hedge funds, anyone holding leveraged positions has stop-loss orders sitting in the system. Automatic instructions that say if the price hits a certain level, sell everything to protect me. When the initial dump pushed silver below 100, it triggered stop losses. Those automatic sells pushed the price to 95, which triggered more stop losses, which pushed it to 90, then 85, then 83. It is a liquidation cascade, a waterfall. The banks did not have to sell all the way down. They just had to push the first domino. The algorithms did the rest. They engineered a crash using your own risk management against you. And while the paper price was collapsing, while everyone was panicking, what were the institutions doing? They were buying, standing at the bottom of the waterfall with buckets. They triggered your stop loss so they could buy your contracts at 83 to cover their own short positions. They forced you to sell low so they could buy low. But a crash needs a cover story. They cannot just admit they manipulated the market. So they gave you Kevin Warsh. The narrative is clean, simple, seductive. Kevin Warsh is the new Paul Volcker, the hard money sheriff. He is going to raise rates, drain liquidity, crush inflation, and save the dollar. The adults are back in the room. The party is over. And because of that, holding precious metals is stupid. Cash is king again. This is the story they need you to believe. Because if you believe it, you will sell your gold and silver. And if you sell, they can buy it cheap. But here's the problem with the Volcker comparison. And this is where the entire narrative falls apart. In 1980, when Paul Volcker raised interest rates to 20% to kill inflation, the United States had a debt to GDP ratio of 30%. The national debt was under $1 trillion. Today, the debt to GDP ratio is over 120%. The national debt is $38 trillion. Do you see the difference? You cannot run the Volcker playbook when you are drowning in debt. It is mathematically impossible. Here's the trap. Every 1% increase in interest rates adds roughly $380 billion to the annual deficit. If rates stay at 5% or go higher, the interest expense alone consumes nearly all tax revenue. The government would have to borrow more money just to pay the interest on the money they already borrowed. It is a death spiral, a Ponzi scheme that only works if rates stay low and money keeps printing. Kevin Warsh knows this. He is not stupid, he is a banker. So what is he actually doing? He is creating a deflationary crash on purpose, not to save the dollar, to justify printing more. Think about it like a coiled spring. To make it launch into the sky, you have to compress it first. Push it down hard. They are compressing asset prices right now. Gold, silver, stocks, everything. Why? So that when the system inevitably cracks, when the bond market freezes or treasury auctions fail because nobody has cash, Warsh can pivot. He can turn around and say, we have a crisis, we have deflation, markets are collapsing, we must print money to save the system. He is creating the problem so he can be the hero who prints the solution. This crash is not the end of inflation. It is the setup for the biggest printing cycle in history. The moment the printers turn back on, that compressed spring releases, with the force of $38 trillion of unpayable debt behind it. So when they tell you cash is king, translate it correctly. Cash is king for about 15 minutes, until the Treasury realizes they cannot pay the bills. Then cash becomes trash, and we go from deflation to hyperinflation overnight. Now let me show you what is really happening while everyone is watching the price crash on screens. Physical silver is vanishing, not dropping in value, actually disappearing from the market. Dealers are sold out, mints are backed up, premiums over spot price are exploding. In some cases, $40 to $50 over the quoted $83 spot price. While the paper price says 83, the street price is 120 or higher. And even at 120, you might not find inventory. This is called Gresham's law. Bad money drives out good money. The bad money, the paper contracts and fiat dollars, is being used to attack the price. But that attack is causing the good money, the physical metal, to go into hiding. If you own silver and the screen says 83, but you know it is worth 150, are you going to sell it? No, you are going to hold it. Take it off the market, bury it. Miners stop selling at a loss. Refiners hold back supply. Dealers lock their vaults. The lower the paper price goes, the less physical metal becomes available. The crash does not create abundance. It creates scarcity. And while the mainstream media screams about a sell-off, the reality is a run on the bank. Massive physical withdrawals from exchanges, metal moving from registered vaults, which are available for delivery, into private storage, shadow vaults in Switzerland, Singapore, the Caymans. Once it goes there, it is gone. Off the grid. Out of the system. This is the ultimate irony. By crashing the price to make the dollar look strong, they are accelerating the death of the dollar system, because they are allowing smart money to drain the collateral at a massive discount. They are emptying the vaults to create a temporary illusion of deflation. But once the vaults are empty, once nobody will sell at 83, the game ends. The price does not just recover, it snaps violently higher. I want you to do something right now. Pull up your phone. Open a browser. Try to buy 1 ounce of physical silver for $83. Go ahead. I will wait. The screen says that is the price, right? CME, Wall Street Journal, CNBC, all agree. Silver is 83. So logically, you should be able to exchange 83 paper dollars for 1 ounce of metal. Call your local dealer. If he picks up, he will laugh. He will tell you one of two things. Option 1, we are sold out. Option 2, sure, I have some. But the price is not 83, it is 120. Welcome to the world of unobtainium. The spot price and the street price just got divorced. The spot price, the 83 flashing on your screen, is the price of a paper promise that settles in cash. The street price, the 120, is the price of reality. And reality is charging a massive premium. That premium is not a ripoff. It is the truth. It is the dealer telling you that the paper market is broken, that the cost to actually acquire physical metal has not dropped. In fact, it has gone up. Because at 83, mines shut down. No miner is going to blast rock, crush it, refine it with chemicals just to sell at a loss because some algorithm in New York had a bad morning. They withhold supply, put the metal in a vault, sit on the keys. You want it for 83? Go dig it yourself. So we have a supply freeze. Mines are not selling, refiners are not selling, wholesalers are not selling, and yet the paper market claims the price crashed. This is a phantom price, a hallucination. It is like walking into a Ferrari dealership and seeing a sign that says, Ferrari's $10,000. You run in with your checkbook and the salesman says, sorry, we do not actually have any cars. But we can sell you a picture of a car for 10 grand. That is what paper silver is right now. A picture of a car. Everyone is asking, where did the $12 trillion go? They see the market cap of gold and silver drop. They see red percentages. They think the money evaporated, but money does not evaporate. Energy is neither created nor destroyed. It just changes hands. The 12 trillion was not destroyed. It was transferred from weak hands to strong hands, the greatest wealth transfer of the decade. On one side of the river, you have the retail investor, the guy who bought silver calls last week because he saw a video about a squeeze. He looks at his phone Monday morning, sees down 36%, sees scary headlines about deflation. He panics, hits sell, takes the loss, moves back into dollars. He just traded a 5,000-year store of value for a fiat currency being debased by the minute because a chart scared him for 6 hours. On the other side of the river, you have the whales, central banks, insiders. They are not looking at charts, they are looking at value. They see the paper price crash to 83. They know physical fundamentals have not changed, so when retail sells the paper contract, the whale buys it, then immediately demands delivery. They use the paper contract as a ticket to drain the physical vault. Your panic subsidizes their accumulation. You are selling them insurance on a burning house for pennies on the dollar. And they are buying it with a smile. You are standing at a crossroads right now. Path A, you believe the narrative, you sell your hard assets, you take cash, you get a currency backed by 38 trillion in debt, a currency guaranteed to lose purchasing power every year. Even if Warsh pretends to tighten, you get a ticket to the Titanic after it hit the iceberg. Path B, you see the trap, you hold the line. You realize that a 5,000-year store of value does not become worthless because an algorithm painted a red candle. Price is what you pay, value is what you get. And at 83, they are giving away the only asset that can survive what is coming. This crash is not a disaster, it is a gift. If you can find physical metal, if you can find a dealer with actual inventory, buy it. Trade their fake dying paper for real eternal atoms. Drain every last ounce from the system until the unobtainium becomes unobtainium for them too. The paper market is dying, thrashing in its death throes. But the physical market is eternal. This manipulation will fail, because at the end of the day, they can print infinite dollars, but they cannot print a single ounce of silver. They cannot print gold. They cannot print trust. Do not let them steal your future. Do not let them scare you out of your legacy. The 12 trillion is gone from the screens, but the wealth is still there, for those brave enough to hold it. Monday, February 2nd, 2026. The day they tried to kill silver, the price is fake, the war is real, do not sell, stack harder.